Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so FOMC yesterday, we got a new FOMC print price at 39.25. Bulls tried to take it up. They knocked it down off the Europe Open. They traded as low as 32.11s. We're back up right around the trading right on top of the weekly pivot at 32.26. So you see, we're in our fifth day of basically playing ping pong with the 9-day. Back and forth, back and forth. That's the net. Guess what? We're the ball. So 5 sessions of that. The Fed didn't really break the tie there. What we are seeing, though, is we are consolidating above the daily mid-band. And it really, the Bears still have a chance. This could go either way. Hourly chart, and you can see, 2 o'clock is your Fed. They took it up into the close. They tried to extend it, but really pretty much it turned 6 o'clock, and the down move was pretty steady from there. They didn't pause at the pre-FOMC print. They didn't pause at the 9-day. They took it right down pretty efficiently below 32.20, and for the last 3 going on 4 hours, they've been testing the weekly pivot from underneath. Now look, Bears, if you want to do it, this is a great start. Okay, you crack this area, you take out the 9. If you can hold here and make a lower low, I think you do go see the roundy today, and the roundy is the mid band today. It's 3,200. I think you have an excellent opportunity to go do it. It's all a matter of which side is going to execute at the edges of price. Bulls failed to do it yesterday. You had a higher high here, and you do that, and you have an opportunity to head back towards that 32.84. They didn't execute. It bled, and then it got out of hand off the Europe Open. So as we go into the Open today, they just did GDP, they just did jobless claims. It's not pushing it past. Right now, you have VWAP is 32.30. They would need to convert that area at 30 to get back to 36 to 39. Our proprietary moving average and the 5-minute mid-band are locked up together at 23.5. And you've got the overnight lows at around 11. I'll be watching for the next hour before we open the relationship between price and 32.30. If VWAP stays resistance, then you're really talking about the potential for 4 to 6 key areas of resistance for the Bears if they want to push down to 3,200. The pre-FOMC price, the 9-day, VWAP, weekly pivot, proprietary moving average, and 5-minute mid-band. That's a lot. Now, what we've seen in the past, unfortunately, is an inability for the Bears to hold areas like that. And then when they give them up, they become incredibly strong areas of support. So the Bears have to avoid that today. They have their work cut out for them, but there's a window of opportunity here to get to 3,200. What happens down there? All bets are off when you get down there. That is the inflection point. That is the longer-term delineator of tape control between the Bulls and the Bears. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.